And hello once again, just making sure that you can actually hear me. Hi, can you hear me? Hello, can you hear me? Yes, you can. Obviously, you can. Um, this is Vishal and Company, another episode of. We are missing Maddie this week as she is moving, so she'll be back next week. But in her stead, sitting in the bottom seat there is Joseph. Hello, Joseph. How you doing, brother?
I know I'm not as pretty as Maddie, but I'm still here.
There we go. Neither are any of us. Just so you know, we are going to be touching on a pretty hot topic today. Bitcoin is losing its fucking mind and traveling well above 60K. Oh my God, the world's coming to an end. We'll be discussing that, of course, in depth later, but we're going to start off with Vishal and his broad overview of the markets. Hit it, brother.
Let's do that, man. Speaking about hot, we had some hot CPI data. Pretty much a hot week for the stock markets in general, to be honest. As you guys can see, Wednesday, Thursday, and then today, Friday, we've had nice green days where we started the week off red, spies looking to break above 4480 here. We have the NASDAQ doing its thing, breaking above 15,000. And oh, look at that. There goes the Dow Jones. And we'll probably be speaking about new record highs possibly next week on these markets. But starting this week, we had two big data points. Actually, it was all on Wednesday. Those are the two big data points. We started off Wednesday with CPI data. So the consumer price index, basically your inflation data. And as you guys can see, it rose. And we can see here on a year-to-year basis, prices increased 5.4% versus the estimate of 5.3%, which is the highest since January of 1999. However, if you exclude the volatile food and energy prices, CPI increased 0.2% on the month and 4% year over year. And if you guys remember, I think Galen, we were chatting about this back in the days, but remember when used cars were the big inflation data? That was the largest move. Absolutely. Well, apparently now we're seeing a decline in the used car prices, but a rise now in food and energy. So a bit of a vice versa there. And of course, people are saying that, it's variable. We don't know what the problem really is, but we're thinking it's more of a supply chain issue rather than, I guess, technical.
No, we have had the Fed warn that this is actually here to stay.
So good thing you bring that up, because you remember I think past shows we kept telling our viewers the Fed was mentioning transitory or temporary inflation, but now the tune sort of switched and it's, hey, this might be here with us for a longer time than we thought it would be. So I just want to quickly show you guys the charts for CPI, because when that data came out, gold popped. I mean, it's having a red day today, but I don't think it's anything to worry about. And of course, silver popped as well. And we'll talk about Bitcoin in a bit, because Bitcoin also jumped on that day. And, the whole debate, right? Is it a safe haven inflation hedge versus a currency? But we'll get to that in just a bit. But basically, we've talked about this. Galen, you've mentioned hard assets, actual commodities, gold, silver, platinum, oil's doing well as well. And heck, even copper is something no one's really talking about anymore, but copper broke out on that inflation data. Here's the Wednesday's candle. And we've been rising, and we've hit previous record highs at 480 per pound. Zinc has hit also 14-year highs, coal, I believe, as well. So a lot of these hard asset commodities are doing their thing right after that CPI data. So perhaps people pricing in now inflation due to food and energy prices, and are now looking at hard assets. And then furthermore, tapering, the talk about tapering, when's it going to happen? Are they going to taper sooner rather than later? Fed's sort of been leading us down the road or on a leash maybe for months, telling us, oh, we're going to taper. Oh yeah, it's going to taper. Well, FOMC minutes from last month now say that the Fed could begin reducing the pace of its monthly asset purchases as soon as mid-November. But let me just read these figures out. So currently the Fed is buying $120 billion worth of bonds per month, right? So we're doing 80 billion in treasuries and 40 billion in mortgage-backed securities per month. And the minutes indicate that mid-November, the Fed could start tapering and cut purchases of treasury by 10 billion. So that's 70 billion a month rather than 80 billion, and mortgage-backed securities by 5 billion a month. So from 40 billion to 35. So I mean, still 105 billion per month in terms of buying bonds.
So
And
they're just easing their foot off the accelerator. They're
exactly.
not actually putting a brake on this at all.
So this is where it gets interesting, because as you guys can see, if you're in that camp where you believe markets are going to drop because of the taper, so some people call it the taper tantrum, because if you believe this whole rise in stocks is due to the Fed's easy money policy or cheap money policy, and again, they're buying things up, their balance sheet is increasing. Of course, a lot of people think that's the case why markets have gone up. So people are expecting that if that taper number came out, markets would drop, and instead they popped. So there's two things, right? One is, as Galen mentioned, this is just a token taper. The market says, okay, it's literally just a tiny amount. It's not even really worth discussing. It's only 15 billion off 120 billion. So we're still, buying up 105 billion per month. Or the market doesn't believe the Fed's going to taper at all come mid-November. What I saw, and this is where I thought was interesting, and I wrote about this on plenty of articles this week, was the dollar actually dropped on tapering. You would expect the dollar to pop, actually, if the Fed's going to, taper. So that was sort of a bad sign. And the second sign was, where's TLT, but my bonds, there we go. Bonds actually shot out higher. So think of it this way: if you're someone purchasing bonds and the central bank's going to start selling bonds, you might want to get out of your bonds. But that didn't happen. Instead, bond prices shot up higher. So either, again, this is just a token taper. That's what people are calling it, where it's just, as Galen said, they're just slowly putting their foot on the accelerator and the market doesn't care, or the market's pricing in that by mid-November, there's going to be no taper. and they change their policy, and hence why, markets continue to shoot higher. So crazy time.
It's funny what you can do when you print close to 30% of the US currency in a matter of 18 months that the US has ever seen. It's amazing what you can do. So obviously, during what we do daily, we look at a lot of companies, especially on our daily ideas. We always looking at different financials, different stats that are coming out. But the number that's always striking me is the amount of cash that a lot of companies have. And a lot of them have built up these large stockpile reserves of cash, because right now cheap cash is being issued in the market. Most of it is stock based.
Yep.
But the key thing is not a lot of it is bank loan based. So it kind of goes into what they were talking about this whole week with the bank earnings. A lot of people were kind of concerned to why loan growth and stuff like that hasn't grown, because banks trade with the 10-year in the short term, so they kind of go in tandem together. But that hasn't happened in this situation, and people are kind of like, oh, short-term rates are not having the influence that they should have on banks' profitabilities right now. And it's kind of an interesting moment to kind of be in. And the last thing I saw before we started was Fannie Mae's auctions for its mortgages. It's always been overbid since 2008. Their mortgages have been overbid, so more people are coming in to buy the mortgages. Of course, a lot of that mortgage buying is from one investor, but it just kind of shows you there's a lot of money flowing through, and a lot of companies have large cash stockpiles in their balance sheets. The interesting question that I have is, you can have $6 billion in your bank account as a company, but what is it that they're investing in that's productive right now?
Yeah.
Where are they putting their money? Some companies like Tesla have kind of relied on putting that extra cash in, Bitcoin or crypto assets. I know some companies are now going into NFTs as well. Michael Burry was going on a rant about that on Twitter this week. And I just noticed, I was like, oh yeah, you know what? There's not much you can do with cash right now, and people are trying to find, not only investors are trying to find things to do with cash, but companies also trying to figure out what can we do with all this cash that's kind of been freely printed.
Yeah, I mean, right now it just seems like, and we've talked about this before. It's either stock buybacks or
Pay off.
play the markets.
Yeah.
That's what you do
Play
with
the
the extra
market.
cash. You don't necessarily put it to productive uses in terms of investment or building factories or manufacturers, factories. But that's just the way the world is right now, man. And maybe, as a lot of people say this, um, maybe rising interest rates is what's needed, right, to start getting money away from those type of assets and putting it in, the real economy or bonds at least or something like that.
That's true. That's true. Most of the activity, funny enough, most of the revenue that the big banks made this quarter, ending September, was from mergers and acquisitions. So a lot of the
Okay.
capital market stuff, the loan income or the interest income actually didn't contribute much to the growth of their revenue.
So basically you're saying
Oh
most of
yeah,
the
and the
money
other
came from
sectors
the investment banking side rather than the traditional business of lending.
of lending money. Yeah, it was mostly mergers and acquisitions and equity trading revenue that they generated. So you kind of know where we are right now with the market just by looking at that. And this is over a 3 month period. And I don't know if the undertone for most of the analysts now who came on to the shows and stuff, they were talking about lower revenues expected in 2022, kind of in tandem with what the
Right.
Fed is also expecting, right?
Well, we'll see in about 2 weeks because the big boys, and when I say big boys, I mean, your Facebooks, your Apples, I believe even Amazon, their earnings are coming up not next week, but the week after. So we will find out. The last week of October is when some of these bigger tech
Yes.
companies release their earnings, and they're always get some eyeballs on that, and we'll see if these estimates were right. But
Fingers crossed.
Sorry,
maybe
guys.
enough.
I had to tune out there for a second, even
No
though you
worries.
heard me. They didn't. But so where do we sit essentially? Like, are we on the precipice of something? Is this more just fuel for the fire that is speculation, or are we actually on recovery? Because the IMF has warned that we're not.
Yep. Nope.
Like what's going? What the fuck is happening? The world's gone
This,
insane.
yeah, this is just me, man. But like we've been saying this, I think, in many shows previously. But this is that chase for yield, right? People know that you literally have to be in the markets. And I think that money, when they see markets are overvalued, they'll look into maybe commodities and maybe even cryptos. But if I can mention, there's a guy on YouTube named iGold Advisor. I met him. If you're watching the show, hey man, what's up? But we met during the Vancouver Resource Conference maybe 2 years ago. And we discussed about, one day there will be that inflation trade into metals. I'm just thinking maybe this is the beginning of that because we saw the CPI data, and this time again it's food and energy, which was surging.
Which
So
I think,
maybe
which I
markets
think
are
is a
getting worried.
valid measurement. If they try to
Yep.
remove that to normalize the inflation, I think they're sticking their heads in the sand.
Yeah, yeah. So I think, uh, we're seeing that move in gold and silver and perhaps Bitcoin, which we'll talk about in just a few seconds here. But what we remember and what we discussed with my friend there is that even during periods of inflation, stock markets basically do this what's it called not break off move, but this crazy the term will come into my mind here in just a minute, blow off top, where it just basically goes vertical, and it's basically because if inflation is coming in hot, you want to try to make or beat the rate of inflation, and
Right.
people tend to look into the
So
stock
hop into the
market. So
market. So this may be the reason why we're seeing a big jump right
it
now.
could be that. So
Now,
maybe
speaking of big jumps, Bitcoin has like lost its mind and is now climbing well over 61 now, isn't it,
yeah.
guys? Is this where
Close
it's
to
at?
62. It's close to
It's
62.
close to it's 62. Now, it just as an opener to give some context, the regulators have made mention that they are mulling over a decision to formally and legally include bitcoins into ETFs, making them tradable on the markets. and this decision is happening on Monday. And
Specifically a Bitcoin futures ETF. It's not just Bitcoin.
okay.
They haven't actually produced the idea for a Bitcoin ETF, but it's a Bitcoin futures ETF, just for split some hairs.
No, I'm glad you're splitting them because I'm leaving them thick. Now, if you want to go a little bit deeper into that, because what the fuck? Sorry.
Okay, well, I guess I'll start off by saying I've been trying to figure out why Bitcoin's up, and I've got it kind of narrowed down to I think three different points, which are more or less coalescing together at the same time to create this market moment. We have, of course, the inflation. So Bitcoin is partially acting as a safe haven from inflation. We have the Bitcoin futures ETF possibility, which if it doesn't get accepted next week, it's probably going to take a crap. And of course, we're nearing the end of the diaspora. So we're seeing a lot of Bitcoin miners. They've made their exodus from China, although a couple are just moving to Hong Kong, which doesn't make sense to me. And they're landing in Kazakhstan, they're landing in Ohio, they're landing in Texas, they're landing in the United States. And it seems the United States seems to be where they're coming mostly. And they're setting up shop and they're already adding to the hash rate. It's actually started to develop. And this is kind of more or less what I expected when the diaspora came to an end. We would start coming around to maybe not all close to all-time highs. I wasn't expecting close to 62, but I was seeing like in the 50s, and then we'd have another halving in a couple of years, and then sky's the limit after that. But
Joseph,
Bitcoin
could you see this as also be a move on behalf of crypto whales to fatten their wallets?
I haven't seen anything to indicate that there's a lot more whale movement than usual. Like I guess I haven't been a whale watch lately, but normally when we have a large, I don't know, I'm going to really butcher this metaphor, but large scale whale swimming, whale surfacing, there we go. It usually shows up in the news, like you see it a lot. And I'm not seeing it yet. I mean, I don't know, but might be different, might be a lot on Monday, but
so
for the most part, I don't see a lot of movement.
Could this be attributed to retail investor FOMO? With the idea that the news is coming up, would they be wanting to all of a sudden pile on board?
I would look at things like Shiba Inu, and I would look at some of the so-called shit coins as being examples of investor FOMO. Bitcoin is honestly largely probably could be considered an institutional coin now. Like nobody looks at Bitcoin and says, I'm going to put my $1,000 in there and it's going to do things. It's not. Exactly. It's going to sit there. It needs to go to like 120,000 right now to get you 2,000 off your whatnot. Nobody's doing that.
So I don't think the retail crowd can make moves like that, as Joseph said, with the capital they have. Again, we go back to the bullish case or the thesis, right? As is it a currency or is it an asset class? And if it's an asset class, then we apply things such as inflation hedge and safe haven status and such. And it seems like it's that the
which
latter.
I think it's incapable of operating as a currency still, and for the most part, all of them are. So it's I guess Bitcoin has become the new gold.
Digital gold.
The digital gold.
Digital gold. And I think, we've said this in the past, but if central bank digital currencies, not if, but when they do come, I think Bitcoin's strength as, a safe haven or digital gold, I guess, because it can be, a way to keep your money away from that system, strengthened. So that's what we'll have to watch for.
With all this happening, I think I'm in the wrong sector. I think I should get into the public sector, work in some government office. Those guys have the best investment track record right now. Congress is killing it with a lot of their holdings. What's it, Ecuador? No, who are the guys who just implemented some Bitcoin?
El Salvador?
El Salvador.
El Salvador is probably killing it right now.
Yep.
Saudi Arabia, we don't even have to go there with Aramco. They're probably killing it. I think I should get into government if I want
I'm just curious how the
manage my
protests are
career
going
too.
down in El Salvador.
Right.
It's like, I don't know, like just protesters are out there one day and then it hits like 62,000 and people are like, I'm going to put my signs away.
So is this then the move? It's not necessarily something that's going to be among the retail investment crowd, that this is institutional money and government bodies
So
dumping their holdings into crypto.
I think when we mention institutions, we should be just a bit careful because, like, I don't technically think this is like banks and such just right now. I think this is probably like, fund managers, like, like some rich fund managers, because with a bank, they need regulations, right? Like, as I mentioned, because this currency is not regulated, you can't generally trade cryptos and hold it on the exchanges. Hence why banks and some of those institutions, pension funds and other retirement accounts.
Let me trim that idea of institutions then from financial institutions to, let's say, corporate institutions like Tesla and everything, and,
right, exactly.
and companies using that as their hedge against inflation. And instead of buying gold or stocks or bonds of any sort, they're now dipping into crypto.
Exactly.
Could that be it?
Yeah, I think that's it.
The banks are starting to come down a bit more on cryptocurrency. They've suddenly woken up and realized it's a threat to their business model. So, I mean, I discovered I can't even like fund my account using Visa anymore.
Oh,
I'm pro.
For which your Bitcoin wallet, your exchange? Is that what you're saying? Sorry.
Yeah, I can't fund my. I can't. Well, I got a Binance account because I
gotcha. Okay, yep.
I hate Binance.
And you can't.
But I realized that there are certain coins on there I can't get anywhere else. So I'm on Binance now. And I discovered that I can't actually load it up with my credit card. And that annoys me because the RBC says no. So
basically, credit institutions are going, no, thank you. This is like pot. We're stepping away from this.
Yeah.
There was a stat that he's deleted his Twitter again. So. But
as he always does.
Yeah, but he pulled out a stat that came out in preparation for the issuance of the ETF. He said they found that of the 1,000 companies that they looked at, like 39 or 49 of them used cryptocurrencies. It had cryptocurrencies in their balance sheet, and of those 39, only 8 of the people who were managing those assets were actually cryptocurrency professionals or qualified cryptocurrency professionals.
Okay.
And that's for institutions like Tesla, EDC. And then Ray Dalio has a counterpoint where he's like, if the large scale institutions, not just these smaller funds, but funds like his were to implement Bitcoin into their hedging for gold, if you make a utopia world assumption that they replace the quantity of gold that they have per dollar value for an equivalent amount in Bitcoin, there's not enough. There's not enough supply for that if those institutions get in. So it kind of has that limit, unless there are other cryptocurrencies that come in and have the same buying power.
That's always been the bullish case, though. A lot of people are saying that in the future, gold's whole idea of a reserve currency safe haven might diminish. So gold's market cap, I think it's like a $7 trillion market cap or something right now. That might decrease, whereas Bitcoins might increase, which means as there's going to be a finite amount of Bitcoin. So if the corporations and institutional sides, if they get involved, that's going to drive prices, to.
But that's funny because there's a finite amount of gold. I mean, we've only, 3 Olympic-sized pools? That's all we've dug out of the earth, and we don't have a lot more left. Gone are the days where you're finding 25-gram nuggets. You're happy if you get like a 2 gram per ton reading. I mean, it's just. It seems crazy I'm not saying I agree with them because running to it so quickly in the sense that, there's a limited amount. Well, we already had that.
True.
Now, is it because it's an exclusionary, quote unquote, gendering it, old boys club with gold?
Maybe.
That it's really hard to get into, but Binance, but Bitcoin is something that everybody can dip their fingers in because nobody's at the door. There's no gatekeepers.
And it could be that naivety because as we talked about before, Bitcoin hasn't gone through a financial crisis yet. Some might think, what we just had with COVID, that 6 months where markets fell, but technically that wasn't like a Lehman Brothers or some sort of, a crazy financial crisis. Yep. But gold has gone through hundreds of years.
Right? So I'm going to be the worst pessimist here, is the one who wants to see turmoil. But I love the ETF coming out. Please allow it to come out. Give gamblers the ability to bet on the future even more. Please.
You want to burn it all down. Holy shit.
That is a great potential. But this is because I feel like derivatives are, they're needed in the market, but they can be weapons of mass destruction if they're not used properly.
And I'm actually really looking forward to that because as you guys know, I think you guys know most of us here are gold and silver bugs. And the reason why, some of us hate the derivative markets and the futures markets and the ETFs for gold and silver is because you can technically short the entire world supply of gold and silver or buy the entire world supply.
That's what JP Morgan does, right? And they run their ETF and they play both sides of the fence.
Exactly.
Basically and you never screwing retail investors.
And you never ask for delivery, right? So you can just trade the paper contracts, whereas when you go buy the physical gold and silver, that's not really making an impact at all on the actual prices. So it'll be interesting to see, when the ETF comes for Bitcoin, if people will play it that way, and we'll see what happens.
And that's the funny thing too, is that with gold and silver, you have the ability to go out and buy ingots, but the Bitcoin in and of itself it's no more material than the ETF that would trade it. So you don't have that option. Do you see what I'm saying? Does that make any sense?
Yeah. It's going to be interesting for sure. But,
again, I can't wait. I love betting on the future. So,
are you going to be like Michael Burry here, he posted about he wants to short it, but he says, okay, I haven't done this before, but how do you short a cryptocurrency? Do you have to secure a borrow? Is there a short rebate? Can the position be squeezed and called in? In such volatile situations, I tend to think it's best not to short, but I'm thinking out loud here.
Well, I think he has a great question there, right? Yeah. Because but like the housing market, he had to go out and make
it,
those shorts happen, right? They printed them up special for him. So it's I think a case here is he just has to find some sucker that'll play the other side. But how are they going to hedge? How are they going to do that? And I guess that comes with regulation. But as was it Nyman? Yeah. Am I saying that correctly? Is that the other investment guru? What's his name? Oh, Diamond. What's his name?
Which guy?
I'm looking at UTK.
Are you talking about Jamie Dimon?
Oh, JP.
Yeah.
Diamond, the CEO.
Yeah. Oh well, I don't know if it's a CEO. It's he's one of the big, huge investors. He's like Warren Buffett. Is it Diamond? Is it what's his
Druckenmiller?
name? No. What the hell?
Paul Tudor Jones?
I'll shut up now. It doesn't really matter. I mean, it does, but it doesn't. I'll find out because I look like an idiot now anyway. He made a statement that regulations would basically eviscerate the Bitcoin market because it can't withstand that kind of scrutiny. And for it to actually become an item that can be officially backed and create this paper on to short it, it has to have those regulations in place. So in and of itself, the ability to make that happen would kill it anyway. Does that make sense?
Yeah, I think it was Dalio. Right?
From a more practical
Dalio, thank you.
I
can't believe I couldn't fucking come up with
From a more practical perspective, I'm not even sure how you could short Bitcoin. It would mean someone have to give you access to their private key. Exactly, so you can go in, you can make the sale, get the money, and then buy it back later when it's lower. But I'm like, even then, I mean, no one who hodls Bitcoin is going to give you access to their private key.
Well, see, that's the thing, right? It would require, just like I guess the stock exchanges now, and forgive me if I've misinterpreted the process, it would require them to be able to back everything they carry. Is that correct? And you would do the exchange?
With the ETF that's coming out now, it has the possibility to be shorted, but it's a futures ETF, so
it's a future.
That's the difference. You're shorting the ETF, you're not shorting the coin.
Yeah.
So there's no direct, unless somebody actually Joseph said, lends you their
wallet,
their
which ain't
Bitcoin.
gonna fucking happen.
Yeah, and there's so
Yeah.
many things that can happen with that. I don't think you want that exposure.
No.
Yeah, but I'm on that camp as well, where I'm like, regulation is going to come in, and although I might come off as a pessimist on the space, it's more of it's extremely cautious, because it's very difficult to pick the winners, and I have no inclination on
No,
which one is going to come
very much
through.
so. And as much as I
Yeah.
hack away at it, it's it is something, right? Now, it's not the panacea that everybody considers it. The fact that we'd switch everything to Bitcoin is not going to solve the economic issues that caused this to arise in the first place. The system itself is broken, right? So the change of currency doesn't mean diddly. It's merely changing our I guess, oppressors in a certain way, right? We're just changing bosses. But it doesn't mean that it isn't going to happen. I have to be very careful in that. It's not something I particularly cherish. But
As you
this,
can see,
I have to admit that the system that we currently run by is fundamentally broken, and it's not even at the currency stage. It's not even at the federal monetary policy stage. We're talking deep set issues like the idea of debt, interest, what investment actually is, whether it's a speculative thing or something you just put in for a share of profits, and you don't trade on speculation, right? Like these are very, very deep structural and foundational issues that have much more to do with how we just live than the actual currency itself. And those need to be addressed to actually get rid of the issues that we're experiencing. For instance, the crushing debt peonage that we're under right now, the income disparity and all that kind of lovely stuff that's, basically forcing us to late 17th century or 1700s position of, 20% of the population has 70% of the income. Right, we're heading towards revolution. Right,
was meant to address the fact that the majority of wealth is centered around the United States. By decentralizing and giving access to nodes all over the world, it actually pushed economic. The promise was to push economic hegemony out of the United States, therefore giving it a more.
But has it actually done that? Because we've got all the producers in the States.
We're not there yet, and I'm not entirely sure we're going to get there, because right now the United States is where the money is, so the money necessary, so people go where the money is. People want to make money from mining. That's, I think, where the promise is beginning to break. We're not seeing what it's supposed to be, what Nakamoto originally wanted it to be. What we're seeing is a return to the old style, a return to the same broken mechanism that you're talking about, which is partially why I agree with you and partially why I still think there's time, which means that when the United States comes down hard and the diaspora happens again, maybe they'll get smart and they'll spread out wider, further decentralization. But somehow, I don't hold out a lot of hope for the intelligence of most Bitcoin miners.
What happens when a whole economy like China, that are predicted to be the global leader in a few years, refuse to also accept it? I don't know if they've banned it completely. I think they've just refused it inflows and outflows off it.
Well, no, they've banned activity.
They banned it completely.
All activity within the borders.
You can't.
Yep.
Yeah.
No mining,
What
no
happens
trading, nothing.
Their strategic partners follow suit. If Russia is like, you know what, these guys, we sell them a lot of oil, or natural gas. We should probably keep,
I think China. Sorry, TK. I think China's sort of reaction to Bitcoin at this point in time is their understanding and knowledge that they are about to go through the ringer economically, and they know that if they keep extracurricular or extrajudicial currency in play, the money's going to flow out of fucking China like there's no tomorrow. Right? And this is the only way that they can make sure the currency stays at home. People aren't taking cash outside the borders because this Evergrande situation is ballooning. It's not just Evergrande now. We've got other major real estate developers within that country saying we're missing bond payments too. right? That's going to bleed down, and this could be an entire economy-wide fall.
Shut down, yeah.
And that in and of itself, despite also what other people are saying, will have an impact, a big one, on the global economy, because up until this point, China has been the biggest purchaser of most of what we've been producing.
That's so true. That's so true. That's why I said I'm curious how it actually, like what Vishal was alluding to, how it reacts to a decade of lack of commerce. How, because it is gold does better in those situations where there's not much commerce going on, so people are trying to store their wealth. So if it's not a currency and it's now a storehold of wealth, that's probably the purest test for Bitcoin for me.
Yep, no,
I say
absolutely.
Bitcoin, but
That makes entire sense.
all the cryptos, yeah. So that's where I stand now, and I'm gonna take the words straight out of Charlie Munger's mouth, the vice chair of Berkshire. He said, investing is simple, but it's not easy.
That's very true. Easy to do, tough to do well at. Well, I think that kind of wraps it up for a show today. And again, sort of doom and gloom. Sorry, this world's coming to a close.
What are you gonna do?
What are you going to do? We're cyclical. That's just the way everything plays out. And, don't go slit your throat, because we're not recommending it. We're just calling it like we see it. And not everybody has a pessimistic picture of what's coming forth. Some of us are a little bit gleeful, like TK, which in turn has its pessimistic edge. But whatever. It's happiness. We're going to see you guys next week, because we've gone a little more over the time, but what the hell? I just felt like talking. And we'll see you guys again next week. Hopefully we've imparted something that you've been able to use in your investment decisions. Of course, always do your due diligence and always talk to an investment professional. And despite all the stuff that we say, I don't think any of us are ticketed. So, take what we say with a grain of salt, please. All righty? Okay. Everybody have a good week. It's been lovely to talk to you. Au revoir.